What's up, everyone? It's Karthik with Money Vest. Markets absolutely crushing it after Jerome Powell literally said, in other words, I am not leaving. This was Jerome Powell in the meeting today after being asked a lot about the new administration. And of course, Jerome Powell's answer was that we are not leaving. So in other words, if President Trump would ask him or request him to resign, the Fed chair simply said no. Not permitted under the law. So president does not have power to fire or demote him. Investors will be closely watching the president's-elect's continuous relationship with the Fed chair because Trump appointed Powell back in 2017, but repeatedly lashed out against the central bank's chief during his first term as president, arguing Powell was not easing monetary policy quickly enough. And of course, we had a lot of tweets from President Trump back in 2017 and 2018 for lowering interest rates, encouraging the Fed Chairman Jerome Powell to lower interest rates as well. In my opinion, I think they both understand the game that they're playing. I don't think, Trump is going to request or ask Jay Powell to step down. I think he's done an incredible job. Yes, he got us into this mess in the first place by calling inflation transitory. But as I mentioned in the live stream earlier today, Jerome Powell has also done an incredible job getting us almost out of this situation as well. He's done an incredible job in making sure that rates can be raised to a very restrictive level while also keeping the economy on a very, very solid and strong footing on path to a potential soft landing as inflation continues to finally come down, sitting just over 2.7, 2.8% when it looks like core PCE is the number, of course, which is the Fed's preferred measure of inflation. And I also want to point out that Powell is a registered Republican. Not that we want to make this too political of a conversation, but I think he does understand the job that he's been given, and that is exactly what he's going to continue to do. There was a lot of conversation from today's FOMC meeting that Jerome Powell and the Federal Reserve will continue to operate as an independent entity regardless of who's going to be in the office. And that being said, I think there's going to be a lot of noise. Trump has to put up this sort of overview that he is encouraging the Fed to lower interest rates, when in fact there is little to no impact on this on the Federal Reserve and of course Jerome Powell, as he's always mentioned that the fiscal department, the Treasury Department, and the Congress, the House, the President does not have any power over the monetary policy set forth by the FOMC members, and they are going to operate as an independent committee. Now, going over to a recap, there was a lot discussed. There was mostly around elections and political debates as well, but we were live to cover that entire report here. And Powell says that he feels good about the economy and says, of course, Trump can't legally fire him. But all in all, while also not giving away too much, he essentially said that the economy is on a very strong footing. Inflation is rolling over. The jobs market is incredibly strong. And so what happens over the course of next year is still pretty unknown and data dependent, as they've always been. But of course, December, there's also expectations for another 25 basis point rate cut. There's going to be a couple more reports that come out between now and then when it comes to inflation and unemployment. And so the Federal Reserve, like always, is going to be making decisions meeting by meeting. But today was also a very, very non-reactionary day from the markets, because if you take a look at where we closed, we were pretty much same pre-meeting as we were post-meeting. So there wasn't really much of a change from the market, but QQQs hitting a brand new all-time high, over 1.5% higher. We had the S&P 500 just shy of 6,000 points here. I do feel, in my opinion, that 6,000 is very much possible on the S&P before the close out the year. 74 basis points higher. And of course, the entire Magnificent 7 very, very strongly up. Tesla almost up to $297, $298, touching almost as much as $300 for the first time in over 1.5 years. And of course, Nvidia surpassing over $3.6 trillion in market cap today, pushing up over 2.2%, hitting new all-time highs. So absolutely incredible gift from the markets on my birthday. Congratulations to everyone. I am super, super happy, not just for myself, but for everyone else who has been investing primarily in technology when it comes to Tesla, Palantir, SoFi, Nvidia, Meta Platforms, Apple. Amazon's been doing really well too. So congratulations to everyone. This has been an amazing gift from the markets. And of course, today is my birthday ending. So today we've also got that 70% discount available for all the courses. So if you've ever wanted to join and invest in your own education, whether it's the fundamental analysis course, technical analysis course, options trading, psychology of investing, all courses, pretty much everything across the board is going to be 70% off, whether we're talking individual courses or bundles. You can also get 3 courses in one bundle at 70% off. You can get 4 courses, all of them, lifetime access, 70% off. Coupon code is going to be BDAY28. So that does expire tonight. So at midnight tonight, this coupon code will expire. It's going to be BDAY28, all caps. That's going to be the coupon code to get a 70% discount across the board, lifetime access to all the tutorials, all the courses, forever, right? So that's going to be linked down below if you're interested in joining. This is the biggest sale we've ever had, and we'll love to have you on board. Now, this right here was a day gain, just under $9,000, so doing pretty well. Options portfolio also hitting a new all-time high at well over 110,000. And so again, if you want to get access to all the daily alerts and the weekly alerts that we send out with the MoneyVest website access, link to the Patreon is also going to be down below if you're interested in joining. One more spot left, by the way, for MoneyVest Education. If you're interested in that one, that gives you access to all the 4 courses at a very, very cheap price. And then, of course, you got the MoneyVest community. 2 more spots left if you're interested in joining for that as well. Now, Nvidia surpasses 3.6 trillion. We had over $406 billion in market cap addition in the S&P 500, of which Big 3 accounted for almost $200 billion. Max 7 coming in $350 billion, and top 10 over $378 billion. And of course, all the Max 7 stocks pushing up very, very nicely, gaining most of the market share. Nvidia, Apple, Google, Meta, Microsoft, even Tesla and Amazon. And we did have financial stocks and some of the more staple stocks selling off today. So JP Morgan, Berkshire Hathaway, Wells Fargo, American Express, Bank of America, Morgan Stanley, all these companies. So this is financial services, which was down over $54 billion or 1.2%. And if you account for the banking sector as well, total 49 stocks collectively down over $110 billion or down over 1.7% on the day. So from a sector standpoint, we did see a lot of rotation out of financials as yields sold off. That was perhaps one of the only sectors that was down over 1%. And of course, industrials and energy also red. Everything else was very, very green. And as the yields came down, the bond market TLT doing also better, up over 1.2%. Now, tomorrow is Friday, and I will be sending out our weekly updates, weekly option alert, and we're planning on either SOXL or TMF or maybe a few other stocks to sell puts on for the next Friday. So I will send out all those alerts on Discord as well. So be ready with your options portfolio for the trade alerts tomorrow that are going to be sent out for the options portfolio as well. So a lot of indices, of course, at an all-time high, a lot of individual stocks at an all-time high, or well within a dip or a pullback or a correction. And of course, Tesla here is still in a bear market, but it's very, very nice to see that it's less than 30% away from its all-time highs. It's now back up to almost $300, and the MoneyVest index sitting at just over 3.9. We are still pretty optimistic in this market, nowhere near close to greed, but optimism is still very present in this market right now. This right here has been the performance of the S&P 500, as I've shown you guys in my previous updates as well. And what this shows you is the performance of the S&P since 1950, non-election years, all years performance, and election year performance. There's been significantly less volatility in election years versus non-election years and all years. So volatility has been lower, and 83% of the times we've seen a positive year from the market with an average gain of 7% and a median gain of 10.66% and a maximum gain, which is, S&P 500 could very well break out to its maximum gain in an election year, 25.77%. So S&P so far year to date is up 25.88%. So we are actually having our best election year in history since 1950. So going back over 70 years worth of history, this would be the best election year for the market, because that was 25.77%. That was the maximum gain that we've seen. And so far, the markets after today are up 25.88%. So very, very nice momentum from the markets here. However, given the momentum and the strength behind this market rally, again, I'm going to come out here and, suggest some caution. And it really comes down to working out what liquidity level are you comfortable with, whether that means having 5% cash, 10% cash, 15% cash, 20%, 25%, doesn't matter. Whatever that number is for you, you have to evaluate. As we were discussing in our live stream earlier today, the risk tolerance and the liquidity needs for every person is going to be different. No two portfolios are ever going to be the same. And for that very reason, everyone has to sit down with a pen and paper. You have to write down exactly what risk tolerance you have and what liquidity level you're comfortable with. If you're comfortable with 0% cash available, all margined in, all into the markets, that's totally cool. If you want over 50% cash, that's totally fine as well. There's no right or wrong answer, only an answer that works for you, because at the end of the day, it's more about being reasonable than being rational. Now, of course, some people may argue having over 50% cash is way too much and you're missing out on a lot of our opportunities. However, given the current climate where even money market funds are well over 5%, at least your cash is earning a pretty decent yield, so you're not earning nothing, and it's higher than what inflation is. And most people, the reason why they invest in the first place is try to beat inflation. And when rates right now are sitting as high as 5% over inflation, so net of inflation, you're still making well over 2 to 3%. That's still a pretty good rate. So right now, I do think that sitting on cash is also not the worst thing. But of course, the markets have been just supercharging higher, especially tech, especially the NASDAQ, especially Tesla and NVIDIA and Palantir. So it makes a lot of sense to be looking at those higher quality companies. However, they've already moved up quite a bit. So, me personally, I would wait for more dips, more buying opportunities to deploy that capital. So the way I like to play it is days like today, days like yesterday, you just sit back, enjoy the gains, let the market do its thing. And on the next pullback, the next buying opportunity, the next serious buying opportunity, that's when we strike. Once again, we deploy capital, and it's the same cycle. It's the same cycle we run over and over again. Keep a close eye on where the MoneyVest index is, and that is really going to be our guiding light into almost all market scenarios, market temperatures. This gives us a little bit of a market temperature, whether the risk reward is favorable or unfavorable. And right now, it is not very favorable considering the markets are in optimism. The yields 4.326%. So again, the lower it comes down to, the better for tech stocks, the better for stocks in general. But the higher it goes, eventually it's going to be a bit of an issue. As I mentioned in our yesterday's market update, volatility getting crushed another 6.5% after the huge gap down from yesterday down to low 15s. And again, the next level is going to be down as low as 14.7. So that right there is going to be that next target to watch for the VIX. Crude oil sitting at just over $72 a barrel at the moment, and Bitcoin, of course, trading at near all-time highs at just under $76,000. So incredible momentum coming in for crude oil as well. Market breadth is still pretty strong. We're looking at majority of stocks, over 74% of stocks trading above their 200 simple moving average, with 62% now trading back above their 50 SMA, and well over 61% of stocks trading back above their 20 simple moving average as well. Coming over to the S&P 500 and NASDAQ here. So this is the NASDAQ pushing up to new all-time highs. Absolutely incredible this week. The NASDAQ is up 5.6% on the month. It is up over 6.5%. It's been one heck of a start in the month of November for the markets. 3 incredibly strong days for the NASDAQ here. Just incredible. I mean, just take a look at this 3 days. It's been just insanely good. And, this is why time in the market is always good than timing the market, because that's how you're able to take advantage of these types of momentums higher. S&P 500 also breaking out to the target of almost 6,000. That's what we're watching very closely. That's the target that I have before the end of the year. Support level is going to be 58.78 down to as low as 57.66 for the S&P 500 as well. Coming over to Apple, and Apple here also reversing back up very nicely, up 2%. Support level is going to stay put at $221. Resistance all the way up to $236 for Apple. Amazon here, yet another new all-time high. We are well past that $4,000 target. So 4K Friday is finally over. Now it's going to be 5K Friday at $250. I believe is when we're going to get to that level. So 250 is going to be that next target. Now it's going to be 5K Friday and not 4K Friday. So support level is going to stay put at $200 per share for Amazon, down to $195. Of course, 3 back-to-back green days. RSI is getting to a bit of an overbought level here at just under 72. Coming over to NVIDIA. NVIDIA, 3 back-to-back green days. Incredible week. It is up over almost 10% this week. I had to roll out my calls. I just had to. Unlocked another $3,600 in capital gains for NVIDIA. Support level is going to step at 144, down to as low as 136 for NVIDIA stock. Advanced Micro Devices also getting a nice little bounce here from that support of 140, up over 3%. RSI MACD was very oversold, so we're seeing a nice little recovery back up for AMD. And that next target and resistance is going to stay put at 172, 173 for Advanced Micro Devices. Coming over to star of the show, once again, Tesla Still trading inside this red rectangle here, but like I said, the probability has been now higher, more than ever before, for us to see a level that we haven't seen before, which is $300 per share. This was the high, 299.29. In fact, we've already hit a higher level of 299.75 because this right here, the higher candle was 299.29. So we've already hit a level we haven't seen since 2 years ago, since September 2022. So we've already on the day have already hit that level. But of course, it's a question of whether we're going to continue on that momentum and close above that $300 level or not. There's a lot of supply sitting at $300 for Tesla. Next up, we've got PayPal stock, and PayPal here on the day slightly down 7 basis points, more or less flat. Support level is going to stay put here at $81. Resistance all the way up to as much as $80 at $89 for PayPal, down to as low as $76, $77 for PayPal as well. And Visa here also very, very overbought right now with an RSI over 73. Support level is going to stay put at 291, down to as low as 278, 282 for Visa. So very nice momentum to the upside, higher highs and higher lows coming in for Visa. Talking a little bit about Meta platforms, and Meta obviously doing much better compared to some of its peers on the day. So Meta platforms here pushing up back up to almost $600, up over 3.4%. Resistance and target is going to stay put at 602. That's the all-time high, and support level down as low as $580 for Meta. Netflix also hitting a new all-time high. Incredible momentum, breakout above 772. Support level, that's going to be that level, all the way down to $736 for Netflix. Congratulations to all Netflix investors and traders as well. Google has also seen a massive rebound after getting gapped up, sold off, coming down to that support, rebounding back up to that resistance at 182. So that right there, 183 actually is going to be that level to keep in mind for Google, all the way up to as much as 192 for Google. At the moment, of course, support level is going to stay put at 175. However, Google and Microsoft both have been, actually Google now after the earnings has performed a lot better, but before the earnings, of course, it was still underperforming the entire market. So 183 is going to be that level to keep in mind. And Microsoft here also coming in with a nice, decent gain. 1% higher. Support level is going to stay put roughly in this range in the low 400s. Year to date, only up 13%. Still underperforming the S&P and the NASDAQ at the moment. Coming over to Enphase, we discussed Enphase on our live stream. So make sure that you do check out the live stream as well to get my Enphase thoughts. But support level next is going to be down at $64.50, unfortunately. We're getting a little bit of a breakdown below $73, and that right there is going to be that next target to watch. Resistance all the way up to $83 to as much as $89 for Enphase. And finally, we come over to Costco, and Costco here also breaking out to almost new all-time highs, getting up to this resistance right here at $9.15. Support level 867. We're seeing a lot of consolidation for Costco in that range. So all in all, hope you all enjoyed this video, and the market's at a new all-time highs. Congratulations, everyone. The market's been on a tear, but we just have to be very careful in this market rally so as to not get super greedy and euphoric with the rest of the market. Just play the contrarian role, be patient, be disciplined, make smart choices. And as always, make sure that you drop a like and subscribe to the channel. Don't forget, we do have our 70% sale for my birthday that's going to expire tonight after midnight. So you can get 70% off with the coupon BDAY28 across the website on all individual courses and bundles as well. And of course, you can also join us at the MoneyVest Patreon to get access to all the Discord, trade alerts, options portfolio updates, weekly updates, trade alerts. Everything's going to be available with the link down below. Happy investing. I'll see you all in the next video.